Hello, class. So, for this topic, we will be completing the adjusting cycle, right? We will be focusing on how to complete and how to come up with the adjusted trial balance. So, we would like to get an explanation on how accounting adjustments link to financial statements, and we will prepare an adjusted trial balance, and we will link from the adjusted trial balance, we will recategorize it to our financial statements. So in this screen, this is just a summary of all of the adjusting entries that we've prepared. In in order to recall this, you may want to go back again to our videos. Okay, these are the exact adjusting entries that we've prepared. So as you can see here, I have 1, 2, 3, 4, 5, 6, 7. A total of adjusting entries. Okay, 7 entries. Okay, together with the with debit and credit accounts, and also have here the context of the transaction. So I'm explaining this to you right now because in the following on the succeeding slide, you would see a mapping of the worksheet. So a worksheet consists of your unadjusted trial balance, your adjusting entry, okay? And from this one, your adjusting entries, you would need to update your unadjusted trial balance to arrive at your adjusted trial balance. So we'll be switching from different slides in order for you to see on how we mapped it on the worksheet. Let's focus first on the March 31 transaction, specifically this one, insurance expense and prepaid insurance amounting to $100. So you can see we call this the trial balance. Okay, this is the adjusted trial balance. It says here the first adjusting entry that we prepared is that we had a debit of insurance expense. Okay, and then we credited prepaid insurance to record the expired portion of our insurance policy. So let's trace it back to our worksheet. So let's find for the insurance expense. So insurance expense would be shown here. Again, a debit. So number one. And then the other account that was credited would be your prepaid insurance, amounting to $100 as well. So you have it here. Okay, so we're doing this exercise to ascertain that all of the adjusting entries here, okay, these 7 adjusting entries, all of these accounts are properly recorded in the worksheet. So we've already managed to trace adjusting entry number 1. So the second adjusting entry, the nature here is that we recorded the supplies that we've already consumed. Okay, so the supplies that we've consumed, that will be categorized as expense, right? That's why we have here a debit of supplies expense. And since we've already used up a portion of this, we would need to decrease the value of our supplies asset account. So that amounted to $1,050. So let's trace the supplies expense. Again, this would fall under the debit. So we will be concerned in looking on the debit side of the adjustments column. So 1,050, I have here supplies expense, so this would be adjusting entry number 2. And the credit on your for your supplies adjusting entry is that we decrease our supplies account, which is an asset, by $1,050 as well. So it will be shown here in your supplies, so number 2. Okay, so your third adjusting entry was prepared to record the monthly depreciation on your asset, specifically your equipment. So we determined that the monthly depreciation was calculated at $200. So that calculated depreciation would be categorized as an expense, specifically depreciation expense. And when we have depreciation expense, this has an effect of decreasing our asset or equipment. But we don't make direct deductions in our equipment, but rather we apply it to our contra asset account called accumulated depreciation. So we are expecting that we will see in the worksheet, okay, the depreciation expense on the debit side and the contra asset account of the accumulated depreciation on the credit side. So let's trace it now. So depreciation expense says here, okay, this one, $200, and the accumulated depreciation, which is a contra asset account, number 3, right here. So the fourth adjusting entry that we prepared, okay, was to record the earned portion of the revenue that we received in advance. Okay, so this was the portion of the unearned revenue that we've already actually earned or provided service to our customer. So that amounted to $250. Initially, the unearned revenue was part of the liability, but since we've already earned this, we will now need to decrease our liability and set up an income or sales or revenue to signify that our equity has increased. So let's trace unearned revenue first. It's amounting to $250, so this will be shown on the liability side of the worksheet. So unearned revenue, it was decreased by $250. I have here number 4. Okay. And then our revenue increased by $250. So we have here number 4. Our fifth adjusting entry was to record the accrued interest expense. Again, to calculate the accrued interest expense, you would need to follow the equation of the principal rate times time. The interest expense that we have calculated for 1 month amounted to $35. And this $35 would be an interest expense. And since this expense has not been paid yet via cash, so we would need to set up a liability account because we are promising or giving our commitment to our seller, okay, that we will pay them sometime in the future, but not today. Okay, so that promise or commitment is a liability, specifically interest payable. So now let's verify whether we have an adjusting entry in the worksheet amounting to $35. So interest expense, debit, have here, number 5. And then the liability that was set up as a result of this interest expense, you have it here as well. So our sixth adjusting entry was due to the salaries that were provided, for the work that was provided by our employees, right? So this was the sample of the March 31. So for the month of March, there is one work day that we haven't paid yet. Okay, and we calculated and determined that the salary for 1 day is $70. Okay, since we haven't paid for it yet, but our employee has already performed the service as a result of their work in our company, we have to record this as an expense. But this expense, we haven't paid it yet via cash because the policy, as mentioned in the previous video, is that we are paying the salaries every 2 Fridays. Okay? So we need to set up a liability account because we are promising or we're giving a commitment that we will pay our employee on the second Friday of April. And in that case, we will be needing to debit salaries expense to increase our expense account. And since we gave our employees a commitment or a promise, we would need to set up a liability account, specifically salaries payable. So let's trace salaries expense, 70. Do we see it here? Yes. Okay. And this salaries expense, this is a promise. So we have here salaries payable, liability. We increase it by $70. And the last adjusting entry that we prepared, okay, is the accrued is the accrued revenue, specifically the accrued service revenue that we performed for our client or for our customer. Again, the nature of this transaction is that on March 11, we were contracted by customer A that we will be providing daily lunch catering services to them. Okay, so from March 11 to March 31, that is a total of 20 days. That is actually we already earned revenues as a result of our work that we performed. And since we already earned that, we need to recognize it as part of our revenues for the month of March. However, we did not receive yet the cash payment of the services that we provided, but instead our customer told us that that we will be paid on April 10, the following month. So we are holding on now to our customer's promise or to our customer's commitment that they will pay us on the future. So what we need to do is recognize that promise or that commitment in the form of accounts receivable. Again, this is an asset. And then recognize revenue amounting to $1,800 as well. So let's trace this promise and this revenue in our worksheet. So as you can see, our accounts receivable increased by 1,800, and we also increased our revenue by $1,800. Okay, so what you need to do next in your trial balance is get the net amount of your unadjusted and adjustment amounts. In this case, for your cash, you had no adjustments. Okay, so the final adjusted amount for your cash will still remain to $8,070. For your accounts receivable, initially you don't have any accounts receivable, but as a result of your adjusting entry, you recognized a $1,800 worth of accounts receivable. Okay, so your adjusted amount for your accounts receivable now is 1,800. For your supplies, initially you had your supplies at 3,600. However, when you performed your adjusting entry, you determined that $1,050 worth of supplies has already been used up or consumed. Hence, you need to deduct it to arrive to your updated balance of your supplies of 2,550. As you can see in your supplies, initially you have the full amount of $3,600, but on the adjusted trial balance, okay, it was now down to 2,550. Okay, so do the same, just add everything in your unadjusted and adjustments column to arrive at your adjusted trial balance. Again, we call this trial balance because we are trying to ascertain or we're trying to verify that the total of your debits, okay, and your credits matches. For your unadjusted trial balance, you have a total of 2,300 for your debit and your credit. And your total debits for your adjustments was 3,500, 3,505, and your total credits was 3,505. From this, again, your adjusted trial balance should be equal in a way that your debit and credit would show the same figure of 25,405. Once you've already summed all of your debits and credits, what you need to do next is to prepare financial statements from an adjusted trial balance. So in this column, the adjusted trial balance, we just simply cleaned the worksheet to show only the final balances of your adjusted accounts, right? So in this screen, as you can see, your final amounts was 25,405. So it would be the same on your adjusted trial balance, 25,405. Okay? And from here, from your adjusted trial balance, what you need to do next is to get all of your is to categorize these accounts and classify it into its respective financial statement. So let's discuss income statement first. So again, income statements will include all of your revenue and expense accounts. Okay. So as you can see here, you have here food services revenue amounting to 5,850. Let's trace it here in our adjusted trial balance. Yes. And we have a teaching revenue worth $300. Yes. Depreciation, salaries expense. Yes, yes. Interest expense and insurance expense. Also a yes and a yes. And we have three more expenses in the form of rent, supplies, and communications. 1,000, 1,000, 1,050, 1,050, and 230, 230. Okay? So get the difference of your revenues and your expenses. Seems like we have a profit of $2,000.65. And this profit will be transferred as part of your statement of changes in equity. Okay? So this 2,065, this came from your income statement. Right? That's the default. What we need to do next, okay? In the adjusted trial balance, let's cross this out because we've already documented this in our income statement. All right? What we need to do is get the equity components in our trial balance. And that would be your investments made, $10,000, yes. And we had a withdrawal amounting to $600 as well. Okay? So again, get your capital as of the end of the month, and you would be getting 11,465. This amount, your capital as of the end of the month, this will be transferred as part of your balance sheet. So again, take note of this 11,465. You will see it on the balance sheet. This one under the equity section. Okay. So again, we've determined that 10,000 here has been recorded in the statement of changes in equity, as well as the withdrawal amounting to 600. The revenue accounts and expense accounts were already captured in the income statement account. So what's left to document are your assets and liabilities. And your assets and liabilities are part of your balance sheet. So whatever your assets are, just map it in your balance sheet. As you can see, you have here your cash, accounts, supplies, prepaid insurance and equipment, and your accumulated depreciation. Again, accumulated depreciation is a contra asset account, and this should be displayed under the asset section of your balance sheet. So you have 1, 2, 3, 4, 5, 6. So you would expect that there are 6 accounts listed here. 1, 2, 3, 4, 5, 6. So the total of your assets was marked as 20,520. And next thing that you need to do, so let's cross this out. Next thing that you need to do is get the liabilities part in your balance sheet. So that would be composed of your accounts payable, interest payable, salaries payable, unearned revenue, and notes payable. So you have 5 liability accounts. Again, trace it in your balance sheet. You have here 5 liability accounts, all with the same amounts. 200 for accounts payable, 35 for interest payable, 70 for salaries payable, 2,750 for unearned revenue, and $6,000 for notes payable. Get the total of your liabilities. It will amount to 9,055. And again, the accounting equation is assets is equals to liabilities plus equity. We already know that our equity amounts to 11,465 and your assets amounts to 2,520. Okay? And since your equation says that your total assets must be equal to the sum of your liabilities and equity, what you need to do is to get the liabilities amounting to 9,055. And when you add your liabilities amounting to 9,055 with your equity of 11,465, you would get the amount of 2,520, which matches the amount of your assets. 2,520 in your assets and 2,520 in your liabilities and equity section. So in this video, we talked about the summarization of our adjusting entries, everything that we've performed. And these adjusting entries would need to be part of your worksheet because you would need to arrive at your adjusted trial balance. Once you already have your adjusted trial balance, what you need to do next is to map these accounts in your adjusted trial balance to perform or to prepare first your income statement, then second, your statement of changes in equity, and last, your balance sheet. Again, to summarize, the total amount to be displayed in your financial statements will be the data or will be the information that came from your adjusted trial balance. If you have any questions, please feel free to pin it in the comment section or raise it during one of our classes. Thank you.